One thing I did want to ask you, and I think the audience would be annoyed if I didn't ask you, the term that you coined, which is turtle soup.
Turtle soup.
It's a phenomenon the last year or two in particular because someone's tried to not hijack it, but essentially coming up that they've created this concept. What are your thoughts in terms of developing concepts? What is the process of going about doing that?
The turtle soup came about when I was writing this Street Smarts book in 1996 with Larry Connors. And turtle soup was tongue-in-cheek at the time that turtle strategy of trend following had been popularized. And so we're like, well, when that fails, it's turtle soup. Chuckle, chuckle, chuckle.
Linda Raschke, a 40-year trading veteran who managed over $300 million.
I want people to understand the power of the pure technicals. I'm such a pure technician. You don't need news. You don't need order flow. You don't need all this extra stuff. You're playing with the best and brightest and smartest minds in the world who have better execution, less friction. So it's not a zero-sum game. It's a negative-sum game. The markets are always changing. Your last trait for being successful is that you must
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Before we get into this episode, guys, I just want to ask for one favor. 52% of you aren't subscribed to the channel currently, so if you can just hit like and subscribe right now, it will help us more than you will ever know. It will help us bring you and continue to bring you the best 7- and 8-figure traders from around the world. Thank you. Now let's get into this episode. Welcome everyone back to the Words of Rizdom podcast. We are back once again and we are still on our incredible US tour. We're in our final state and that is, I would say sunny Florida, but I brought the rain from England with me. But we are in Florida and we are very much excited for this particular podcast. We're still the number one trading podcast in the world and the fastest growing thanks to all of you and our incredible guests. And a huge shout out to TradeZeller for allowing this tour to take place, the number one trading tool in the market for backtesting, in-depth analytics and automated journaling. So make sure you check them out. But today, this is a podcast I've been looking forward to for a very, very long time. Before we ever scheduled it, I just hoped that one day we would be able to make it happen, and thankfully we have been honored today to be able to do so. And we are joined by a 40-plus year trading veteran, known as one of the very best female traders in the world, and the author of Trading Sardines. We are with the one and only Linda Raschke.
Thank you, Riz. Thank you for having me.
It's my absolute pleasure.
As a guest.
And I'd like to go straight into something, because as I mentioned, I literally read an article on the way here which had you on a list of one of the very best female traders in the world. And I'd just love to ask, what would you say separates yourself? Is there one thing that you could really pinpoint that separates yourself from many others over the years who have tried and maybe not have made it in trading?
First of all, I'd like to say, I hope it's not female traders because there's not that many of them. And I'd like to just be recognized for the bottom line. And I think that is one of the things that's so defining about our industry is that it doesn't care about your gender or your race or where you come from. It's not female or male specific unless you're on an institutional desk at Goldman Sachs. So for everybody out there that comes from all sorts of different ages and backgrounds and circumstances, just keep that in mind. It has nothing to do with being male or female. It's all 100% bottom line business. With that said, I can only tell you about my own personal experiences because there's so many different variables and components that go up into an individual's makeup. And so I don't know, I can't speak for others why perhaps they failed. I can suggest some traits that I felt that were strong suits of mine that opened that door for me. And the first one would be I have a very good ability to be single-minded, incredibly focused. And I think that single-mindedness, and that came from several different things. I mean, I used to be a pianist when I was growing up. I'd play 6 hours at a time for practicing. And so that takes a lot of concentration and ability just to focus. But is very important for not only trading, but any peak performance sports, be it tennis, golf, whatever. You must tune out everything else and have zero distractions. And so just be mindful for those of you that are listening to this, how many times you are pulled outside of your flow by social media or TV or noise or distractions. And I don't think that you have great odds of long-term success as long as you don't make concerted efforts to start to eliminate those things. Another thing was I had a lot of periods early in my life, early maybe like 14 through 24, where I had extreme adversity. And everybody has adversity that comes in different forms. It could be poverty, it could be abuse, it could be, health issues, it could be a lot of different things. But I think that once you have overcome some type of adversity, particularly during those teenage years or early years, it builds characters and it allows you to withstand stressors later on in life. And so if you haven't had that experience or ability to overcome adversity early on, you need to be extra careful. If all of a sudden you hit your 30s and you think life is easy cruising, you're going to be a much more fragile type of makeup when something extraordinary does happen, which it will inevitably, So that would be the number two thing, And in that process of overcoming adversity, I also think that you gain tremendous self-confidence and belief in yourself. And so that's the other danger about listening to opinions of others or being influenced by others in the marketplace is every time you do that, what your subconscious is saying is, I don't truly trust myself or have the belief in myself to find my own way. And it is a long journey. It's a journey of trial and error. And I would say that, you have to at least make it through the first 10 years. Sometimes we can have initial early successes, and it might be a result of market environment or things. But I think ultimately you are trying to go towards looking for the ingredients that would ensure success generation after generation, decade after decade, and out there, 20 years from now being successful.
No, I couldn't agree more. And that is exactly what we're trying to highlight throughout this, podcast, the things that will allow people to progress and to make leaps and bounds within their journey, but not just for a short period of time. No doubt you've probably seen many traders who came along throughout your career who performed quite well for a period of time. Maybe they decided to leave the industry and move on to other things, but many who may have performed very well, as you said, maybe it was market conditions or certain market environments or a market event that they were able to take advantage of. And unfortunately, maybe didn't perform beyond that. And that's why it's pivotal. And that's why we're so excited to be able to have someone like yourself who has been able to observe all those things, but have such a long-standing career. And just to go back to your very original point, which is, I think, extremely valid, which is it doesn't matter in terms of your background, in terms of your gender. None of that things matters in the markets, and the bottom line being the most important thing. I couldn't agree more. And that's why in terms of this podcast, we love to highlight those principles, the principles that make that bottom line take place. And I loved what you said in terms of focus, because that is something, as you mentioned, social media as an example. I think that's a huge distraction. It has its benefits, of course, like being able to interact with other traders, because one key difference from when you started out to now is that, when you started out, it was more floor-based, and therefore you're in an environment of traders all around and you're able to observe what different people are doing. But now it's very isolated, very much at home. But then social media is available, but can be a huge distraction. What do you think traders should be looking for when they are utilizing, say, whether it's social media or some sort of community? What should they be focused on? And then what should they sort of be avoiding in terms of to keep their focus on what actually matters in terms of the markets?
Well, I do think that the mediums of communication have changed. They show that the number of people that actually meet somebody else in person that might become their mate is like down by 90%. You're meeting people online, and it has become the norm for definitely social interaction in a lot of ways. So you just simply need to differentiate between the social interaction part of it versus what is going to support you in your business goals. And I think that you can draw some boundaries. I think a person that talked about this that's well known as a trading coach is Steve Ward, and having these overlapping, intersecting circles. So during the trading day, you either make it a point just to do your own work, have your own thoughts, or there are some alternatives. For example, I use Skype. I have 2 or 3 buddies that, I've been on Skype with for like 30 years. And we don't talk about trade ideas. It's more just the humor, or if a report comes out or something interesting. But there's nothing to say that in the evening you can't joke around with your friends, scroll through Instagram reels, or post on Facebook, or whatever your medium is towards reaching out with other people. And then with that said, also make a conscious effort. If it means going to the gym or walking your dog or even at the store, it's still very important to say to the checkout person, "Oh, thank you very much. Hope you're having a good day." Or any time that you can carry on a live conversation with people, it goes so far further in terms of benefiting our own neurotransmitters and things like that. So it's there's so many solutions. You just have to be creative in finding them. And lastly, recognizing the addiction side of the equation. And that is what you must figure out how to pull free from. Anything that's clicking the mouse, that's interacting with Twitter, social media, Instagram, TikTok, all these things, they are manipulated to juice that dopamine. You are a puppet that's being manipulated to juice that dopamine. And that's why the uproar against TikTok sort of hijacking our youth there with their algorithms. And there's so many other ways that you can do that. For example, every time you hit a tennis ball or a golf ball, it's the same thing. You're releasing dopamine. And do your own research, read up on it, and try and think of 1 or 2 other avenues that you can still get that same little jolt.
I loved what you said at the end there in terms of recognizing the addiction or being aware of what's going on and trying to be more proactive in making those changes. Because I think that's where a large part of the term drifting from Outwitting the Devil by Napoleon Hill, essentially just you're doing stuff without even realizing, you're just drifting along. And I think, unfortunately, a lot of us and a lot of traders out there, and it could even be in periods of time in our lives, but a lot of us find ourselves in those moments where we're just kind of like robots almost, just doing things without being aware of them. And only when you bring that awareness in, as you mentioned, can you then start to make changes or start to at least recognize where your faults are or even where you're doing things right. One thing I'd love to ask you, which is in terms of trading, like even to this day, you're very, like even today, you're posting charts, futures charts on Twitter, and I thought, or X now. And, I just love to know, what is the drive? Is trading almost in your DNA at this point, do you think?
I wouldn't say that it's in my DNA, and I'm not trading full time. I'm not trading full leverage in the size that I used to do. I was actually supposed to go out to the barn and ride, but my horse colicked, in the middle of last night. So I just was like, well, I might as well sit here. It's raining and so forth. But I almost always have a position on. I can't help it. It's just because it's like you're walking down the sidewalk, you see a dollar bill, well, you pick it up, right? I mean, it's not anything huge, but it's just, okay. And I know my game. And so there's a part of me, I just said, on one hand, you need to do your own work. So some things I'm not going to post necessarily on a timely basis, but I want people to understand the power of the pure technicals. I'm such a pure technician. And I can show you so many fabulous things that you don't need news, you don't need order flow, you don't need all this extra stuff. Okay. And so sometimes I do that to say, see, this is what a trend day looks like. This is a pattern. Eat the tail. Now you go see if you can find 20 examples of that yourself, And so it's just my little way of, hopefully pushing a few people. Oh, that looks interesting. Oh, let me see if I can find some past chart examples. Oh, yeah, that's because I feel kind of very strongly at this point what is going to be durable and robust and hold the test of time. And that's a tricky issue because the markets are always changing. So there's your last trait for being successful is that you must have the ability to adapt. So the So's Bandit game came and went, there's all kinds of games. I call them games, but they might be playbooks that have come and gone over the ages. Obviously, the cliche adage for right now is it doesn't take money or brains to make money in a bull market, and so this era of hyper liquidity that hopefully will last for another 2-3 years. We don't know, but it's not going to be there forever. And how are you going to adapt and change your game, 10 years from now, perhaps, when we could just be in a long, flat, sideways period for a decade and the momentum game will completely go away. So, yeah, that adaptability is a very important factor. But, as far as myself, I mean, it's just fun. I think it's probably true with anybody that's become proficient in something. I can't play the piano like I used to, but I have friends. Larry McMillan's a very brilliant pianist. People probably wouldn't know that about him. He puts out an option service, but he can sit down and just rattle stuff off the keyboard up and down, and there's no better feeling in the world. Same thing with, if you're a great sports player, tennis, or maybe you're not competitive at golf or tennis, but you take your grandchild out on the course and, you can play a great game. And it's another way of getting you into that glorious state of flow. That's cliche, but it's true.
In terms of being able to pivot, are there key things that people can look out for when it's time to pivot, or things that can help them to make those, be able to change and adapt to the markets or the times?
Well, there's one thing that's really important in the markets, and that is, and this is credit to humans over AI and artificial intelligence and these things, and part of this is my own opinion. I don't know if it's substantiated anywhere, but this ability to process relationships, that's what makes a successful trader. Okay, so it's noticing if two data points are converging or moving further away. It could be a relationship between two different markets. It could be a relationship in terms of, pricing models. It could be a relationship in terms of where are we trading relative to the opening price. So same thing, what leads to outliers and aberrations, which there's huge gold if you can recognize an outlier as it's unfolding. And I'm not talking about an overnight event-driven type of situation, but more, for example, when yield curve which have been banded in a banded type of range, or just say interest rates in general had been in a banded range for many decades, and the yields on the 30-year bonds started going outside of that range. Okay, so human instinct, anytime we start to see a relationship that expands past what we're used to or our comfort zone, people want to go in and immediately try and arbitrage that or converge it to look for that reversion back to the mean. Does that make sense so far?
Yeah.
So I think humans feel very comfortable playing this reversion to the mean type of game. But your ability to recognize when something is not going to revert back to the mean but continue on in that direction is really where the superstar traders are made. And so I think that a trader with experience, that's another edge, stay in the game long enough and you will build up experience. Once you have that experience and you can recognize something like that unfolding, I think that you have the ability to process that perhaps a little bit more quickly than, the AI algorithms, which are naturally trained on past data, you see. So, and we can't tell an algorithm, this is expected or normal and this is not. But I do think a human with experience can see when something unusual is beginning to happen.
Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Do you want to trade like a professional futures trader? Well, Alpha Futures is here to make that happen. Now, you can trade up to $450,000 with Alpha Futures, and they have every platform that futures traders love. Tradeovate, NinjaTrader, and TradingView directly. Absolutely incredible. The futures traders who watch the podcast, and there are thousands of them, say that they love Alpha Futures. Here are just some payouts that you can see on screen that have consistently gone out with them. What I personally love about Alpha Futures is they have the highest drawdown to target ratio in the entire futures industry, meaning you get the most drawdown to trade with to hit that target, which is absolutely phenomenal. Now, I don't know if I should be saying this, but Alpha Futures has actually brought Alpha Prime, which is the first of its kind in the entire industry, where traders can get a salary and trade with real live capital, get access to so many tools and risk managers, all by being a consistent trader at Alpha Futures. They have advanced plans, standard plans. Now, on both of those plans, you can get 20% off thanks to the podcast, and that is using the code RIZ, so that's RIZ. The link's in the description below. Now let's get back to the episode.
Understanding the importance of relationships, that's something that you don't have to have a college education for. It's a different type of intelligence. It's not a matter of, oh, you passed the SAT with, 1,500, because I know a lot of these top proprietary firms will look for people that have been from Ivy League schools and so forth. But understanding that if you don't have that type of education, there's that type of intelligence also where if you can take a cube and, they'll have the little puzzle pieces and only show part of it and say, okay, which is the missing piece that goes and fills this little back hole back here, you see? And so it's this spatial relationship, this other type of intelligence. I think that's very important for trading and the markets. And it takes you out of that whole pressure to be in that quant realm, to be able to quantify things, even though I do believe a lot in modeling and so forth. But, I kind of went off in 5 different tangents on this matter of relationships. Mm-hmm. But just think about it. Think about if you're in the marketplace and you put on a trade let's say you had no idea what that market was doing initially, but for whatever reason, you put on that trade and now you're watching it for 5 minutes. You have a much better feel as what that market is doing because now you're watching the price action relative to your entry price. See? So it's it ends up being sort of this organic, holistic type of I hate that word intuitive, or feeling, but it is a gestalt type of thing,
That was my question. To go off on that in terms of the AI trading and sort of algos. How important as an individual trader though? How much play does intuition, or I know you didn't like that word, so I apologize.
Okay.
How much does that gut feeling, that intuition, how much does that play into your trading, or just generally as traders and traders you've interacted with? How much does that come into trading?
Well, I always have my homework sheet from the night before, so it's very basic too. It's look to buy, look to sell, something, and then I might set up 20 different markets, and I might make trades in 3 or 5 of them because it's very much a numbers game for me. I strongly believe in fat tails, and I strongly believe that the bulk of my profitability will come from recognizing and riding one of those, even if it's just for a day, So the markets are so bountiful in these fat tails, and people are always cutting off their nose to spite their face, playing for little profit targets. But that's really important concept to study, how can you capture these outliers, even if it's not an event driven, but let's say, for example, where do the larger swings come from? What are the pre-existing conditions that lead to a better move on, say, a 2-hour chart, even that type of study? So it's the intuition word. I'm the worst if it comes to intuition. I'll get it wrong every time. I'll get it wrong every time trying to analyze news or macro. Trust me, I know that. But intuition technically is a compounding of all your experience. See? So if you've been in the markets for 30, 40 years, the compounding of all the experience in the charts that you've seen over and over and over is what has created this area in your subconscious or unconscious, whatever you want to call it. And so a little bit of that bubbles up, and that's what intuition is in my definition. So there's a lot of times where I can give you a really good example because it happened today. And it'll also show you I get caught in little stuff like everybody else. For whatever reason, coffee's been having this prolonged coil, and I know better than to try and go in there and get into these dead markets until they come to life. But I was waiting for a little sign yesterday. Will it come to life? And it started on, early on coming to life. So I bought coffee and it took out the little swing high and stuff. And then I always sort of analyzed the positions in the middle of the day, and it wasn't looking so great. It had come back down, and then it was down a little bit below where I bought it from. And then all of a sudden I'm watching it and I'm going, this is another freaking false breakout, isn't it? Yeah, you got me again. And I just, flatten it. And I'm just like, okay, because that happens to me all the time. I know I'm wrong, flatten. And then today, I wasn't really paying attention to much of anything, but I have my little quote board I'm watching, and I'm like, I'll be a son of a gun. That little frickin' market is up, $4, $4.50. When I sit down, I'm like, I know you little weasel, you. So I didn't even have to look at a chart, because if it was going to be a test reject, it would have had continuation to the downside. Mm-hmm. All right. That's the expected price action. If something fails, you want to see it continue in the direction of the failure, not just be that little, 1-day trap. So it was starting back up, and I just bought it at the market. I didn't even have charts. They were all on 10-minute delayed on this computer, And then all of a sudden it's up like 13 handles, and it was my biggest winner of the day. So that was intuition in terms of not knowing what it was going to do, but like, it's I've seen the markets do this to me before. Sometimes they like to have that last shake of the apple tree before they then do the real move. And you see that, and if you've seen it 100 times, that's part of why it takes so long to really feel confident about trading, is just because we've seen it and learned the hard way 1,000,000 times. But then you can act with so much more confidence when you do see it. So that's my definition of intuition.
I love it. And it's backed by your experience, as you said. And do you believe that then your confidence to be able to act on that intuition, that experience, comes from seeing those patterns over time, seeing the markets move over time in the same ways and present very similar situations, and then maybe the first few times there's difficulty to be able to trust that intuition, that experience, but the confidence comes from you taking the actions over time, and then as you start to see results, start to see that the intuition or technically or the experience is sending you on a correct path, that's where you build the confidence to be able to trust it?
Well, I think that confidence is something that a person just has or doesn't have, okay? If they didn't have confidence somewhere, perhaps from prior experiences, perhaps they were good in sports when they were young, perhaps they were good in a subject at school, there has to be some innate sense of confidence, which is really belief in yourself, okay? But, I mean, we never know for sure. When I do stuff now, I don't even think about it. It's like I don't want to have to process anything during the day. I'm not as good with words. I'm better with the charts and numbers and relationships. And if I had to describe to myself what I was doing ahead of time, I would just get so tangled up in all the words I would never pull the trigger. So it's more like it's automatic, but I'll keep my eye on it for a minute or two. Unlike yesterday where I got caught up in other things and all of a sudden I'm looking, I was like, I really kind of forgot it, put that position on.
In terms of going back, I know early on in Korea, there was a moment where you had lost a large sum of money. I think it was like, for you at the time, it was 80.
Which time?
Well, that was one
time.
I did love for one of the chapters in your book, which thank you for sending that to me, by the way. Incredible book. If you haven't seen that, make sure you check that out, Trading Sardines. And I loved one of the chapter names, which was Oops. I just love that. As a trading book, that just sounds like, I think everyone could relate to even just the chapter name, and they could probably try and guess what would be in there. But I think very early on, there was like 80,000 plus, 86, 89,000.
Oh, when I blew out, you mean?
Yeah.
I was selling straddles as takeover stock that time?
That time, yes.
Oh, yeah.
And I wanted to ask, what was it that kept you in the game, kept you pushing on, even going through that experience, which no doubt...
Because I didn't want to file bankruptcy, which would have been my only option, and age 22. I mean, I really didn't have any choice. I was an indentured servant into the business. It was a really miserable next 5 years because every dime I made was paying back the clearing firm. I'm probably the only fool out there that paid back 100 cents on the dollar. Later on, I found out everybody negotiated these deals, but... clearing firms made a lot of money off me, so
what was the mindset from going from there, and what would you say that really helped you to go from that process of, was that quite early on into your trading career?
Yeah, like the first year.
Really?
Yes.
Wow. And then, going into later in your career, you've been highlighted in New Market Wizards by Jack Schwager. You managed a hedge fund with over $100 million.
At 300 million, yeah.
Oh,
yeah.
Triple that number.
Well,
300
it was actually 250, but it was on 2-to-1 leverage. So we had a Class B shares that was twice the Class A shares, yes.
Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZeller. TradeZeller is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a forex trader. Whatever trader you are, all you do is connect your trading platform directly with TradeZeller. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZeller does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZeller. So use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Do you want to trade up to $400,000 in simulated capital? Well, thanks to our sponsor, Alpha Capital, you can do just that. Alpha Capital has been leading the way in the prop firm industry. They have actually paid out over $80 million. $80 million to traders all across the world just like you. If you have Edge, they have a plan for you. They have one-step plans, two-step plans, and three-step plans. So no matter what you prefer, they have it for you. On top of that, what I personally love is that they cater to all types of traders. And as we know through the podcast, we have all types of traders. So whether you're a swing trader, whether you're a scalper, whether you're a day trader, it does not matter. They have a plan ready for you. On top of that, they have all the very best trading platforms. So no matter where you are in the world, you have a platform designated to you, even your most favorite and loved trading platforms. Now, I don't know if I should be telling you this, but Alpha Capital is about to launch Alpha Prime. And that is the first of its kind in this entire industry, a salary for their consistent, profitable traders. Live capital with access to tools, mentorship, and risk managers. Truly becoming a professional trader. And that is a pathway through Alpha Prime. There'll be more details about that, no doubt, because I don't know if I meant to tell you anyway. Thanks to them and thanks to the podcast, you can get 20% off. 20% off any and all challenges. One step, two step, three step, swing, day trade, scalp, whatever. It's 20% off across the board. RIZ, use the code. Links in the description below. Let's get back to the episode. Like when you were in that moment early on, did you ever foresee yourself getting to those sort of levels and reaching those sort of heights in your career?
I never thought about it. I never even thought about it once. I mean, I am very much a day-to-day person. I get superstitious about looking too far down the road. You know, I do. I want to stay in the moment and just do the best job I can at the time. And with that said, there was one time, I mentioned it too in the book very early on. I confess that I had a bad illness at the time. It was an immune deficiency thing. And I just really was a vegetable for about 2 years. And I saw an infomercial on late night TV that was Tony Robbins, and it was the cassette tapes. So that tells you just how long ago it was, his cassette tapes. And he went through this process, of write down goals. I listened to a tape every day, half an hour after the close. And I even had an assistant then. I don't know why, because we weren't even trading. I was like, okay, we're going to listen to these things, And I was just hoping for some tips on, restoring my vitality and goodness knows. And he said, well, write down your goal, type of thing. And I wrote down I wanted to make X amount of dollars within 3 years. And that was about the only time I ever did that. And I did it in half the time.
Wow.
And ever since then, I'll just tell you one other profound moment in my life. And I was trading by myself. I'd left the trading floor. I was out of my home office, which consisted of a $1,000 telephone line to get the data, and another $1,000 to it wasn't Moncheck Weber, it was Quotron, right? Yeah. So $2,000, and I don't even have charts. People have no idea how good they have it now, right? And I used to write down my, P&L every day and keep this running tally of, how my account balance was. And I clearly remember it was like sometime in July, and I think it was 1986, maybe 86 or 87. And I kind of became impressed with myself, right? I'm like, oh, wow, look at this, Kiss of death. I don't think I reached a new high water mark for 5 months, after that. And I'm like, I am never again looking at my daily balances, I know in my head if I'm up or down. I know how much a position made or not. But even with my hedge fund, and I first I was a principal trader for several other funds, and I started my own. I started an offshore fund. People don't know about that one, and then my main fund, the Granite Fund, which was the one that was I think we were ranked 17th out of 4,500 for a top 5-year performance. And even when I had that, I had all my money in it. I never had a separate trading account. So all my money was in my own fund on 2-to-1 leverage. I never had any idea what it was. My business manager took care of the taxes, so I didn't see that. And I had another colleague who wrote down all, in an Excel sheet and stuff, the P&L and kept the balances so that our investors could see that because they want to know. And I never looked at it once. And I think that was what allowed me to keep on such an emotional even keel, not get high if there was a big win, not get low if there was a losing win, a losing trade. But trust me, if you've been trading that long, you've got a pretty good idea just exactly where you stand. And so I could truly stay focused 100% on the process. And that was a super strength for me, just staying focused on the process. And that is darn near impossible if you are a newer trader starting out and you have an account size of $20,000 or $30,000, or you don't have money set aside to live off of for 1.5 to 2 years. It's a very big challenge. You either better have a rich uncle that's going to die and leave you a ton of money, or you got to, scrap and claw and get some people to believe in you to put a little pool of money together. But you cannot trade properly when you are worried about losing, or watching even the fluctuations during the day of the P&L. So that's a big hurdle for a lot of people.
It definitely is. And I think it's such a valuable lesson because, as you say, if that was something that helped you to stay focused on the process, then I would imagine that a lot more people who are hopefully listening to this will be able to take action on that as well and try and implement that themselves. Because as you say, if you're trading with much smaller capital as well, like especially starting out, that is the focus. You're focusing on that P&L consistently. You're focusing on trying to avoid loss. Every loss is really a painful experience when, by focusing, I think what the misconception is rather than focusing on the monetary aspect, which is of course why a lot of people get into trading in the first place, by focusing on that, it rather heightens the emotions, because the one thing guaranteed in trading is that you will lose. And then when you do lose, if the one thing that you're really focused on is the monetary aspect, you're only going to have a negative experience when that takes place, versus by focusing on the process, you then, yes, you'll have losses, yes, you'll have wins, but as a result, that's usually how you'll end up making money overall as a byproduct of focusing on that process. But how important, in terms of focusing on the process, how important is that for traders to be doing? And would you be able to define process from your standpoint?
Absolutely. Process is the routines and the rituals for starters. And I mean, those are very important. At the end of the day, some people might write down their numbers or their trades or do some type of logging. The process of when are you going to put together your game plan for the next day or scroll through your charts. The more regular and consistent you can be at doing it at the same time, the same way, it's very important, to do that. And then another thing that was important for me, and I think people might have to be creative in doing this, was setting up your own support system. So when I started off, obviously, I wasn't married. I didn't have kids. I didn't even have a car. I could lead a very frugal lifestyle with a roommate, and not spend hardly any money. And so I didn't need much to live off. And then later on, when I had my fund and I was married and I did have a kid, I was blessed in that my husband was Mr. Mom. So he took over the duties of doing the grocery shopping, the cooking, taking the kid to, parent-teacher conferences, and then that could allow me just to focus 100% on the business. And then lastly, as I became successful, I had a business manager. Very important if you're going to run a business such as a fund. And all the phones went to her. All the phone calls, all the client interaction, and she was in another state. And I would, at each month mail her up a packet of bills. She'd take care of everything. So I never had to deal with, other than the due diligence visits that the asset allocators come and pay to your office. I never had to deal with that. And it's a lot of extra work. So I do think there is room for people that are on the verge of being right where they want to be to pool resources. You see, maybe pool a common office space where you can maybe get, one gal Friday to do errands and, pay bills or whatever it might be for you. It just depends on how badly you want something, really.
A large part of the conversation leads us back to what you mentioned very early on, which is just being able to focus on what will generate results overall, especially within your trading, be able to focus on the trading itself, the process itself, versus all these external factors in life and as part of going into the business side that can distract you and take away your energy and take away your focus from those things. And it sounds like to be able to be a high performance trader within the industry, you need to have that focus on the actual trading element itself, have a main focus and main attention on that. Like, did you have during your career where you focused on other businesses outside of trading? Did you have any ventures outside of trading that you were focused on as well, or were you purely focused on the trader side?
No, it was pretty much purely trading. I mean, I went through a period where I had my first divorce, and I only had one divorce. Okay, my first of 10 divorces. Yes, I'm such a Palm Beach socialite there, But no, my one divorce, and at that time, my husband was firmly convinced that I was hiding money offshore, which was not true. But I had forensic accountants coming and doing, oh my God, so much ridiculous stuff. So I had two fabulous people working for me, my business manager and a tech guy. I'm like, I really have to keep these people because I know when all this is water under the bridge, I want to continue on with these people.
Yeah.
And so I had started a sort of like a little chat room type of thing, trading room. Mm-hmm. And Ron Shear had been a friend. He had started a group of prop shops. Generic was the name of them. And he was actually the one who created the missile, which was the Amex futures on the American Stock Exchange. Big innovator. I think he still dabbles in the markets today. Just smart guy. And at some point, I don't know how many prop shops he had, like 70 across the country. Wow. And, I'd gone up to visit him one day and he said, I was just thinking about doing this little thing, just to put out some ideas. And he goes, I'll pay you, to create, ideas just for my prop shop traders all day, And I said, well, I really didn't want to do that. But I had somebody else that had contacted me who loved stocks, stock chart addict. I'm not going to mention names because that's not irrelevant to this particular podcast that we're doing, but he was really good. And so I said, hey, Joe Blow, I've got something. Are you interested in it? Sure enough, he was. He's Mr. Personality. So we got a little business going there for a couple of years and I could pay everybody. And then, eventually it subsided. But no, I mean, I've pretty much eat, breathe, drink markets all my entire life. And I liked it that way.
Definitely. Now, the reason I asked that is because I know that a lot of traders, from my interaction with them, their goals is to essentially try and achieve and replicate what you have. And I think it's important to highlight how much focus in towards, which is interesting because as you mentioned earlier, you weren't someone who would write goals or anything like that. So it wasn't necessarily something that you did where you had that as a goal, but you're so, again, focused on the day-to-day of how do I perform today? What do I need to do today to continue to progress within this career? And it's very interesting, actually, that side of things, because, as I said, a lot of interaction that I have with the general community is they have these goals of, achieving 7, 8, 9 figures, having funds. And a large part of me does believe that they don't truly understand what it takes to get there, which I'm loving this conversation because I think it really highlights that focus and that level of focus, not only on the task, but also to a degree, maybe not spending a lot of time goal setting on whatever that goal may be, and actually just focusing on what's going to get you there, but also how to achieve hyper success on that level. You can't allow your focus to start looking at other outside things as well. But also, what I would ask you actually is, off the back of that, what's the reality, do you think, of people being able to replicate that level of success? Because I do believe traders can be successful and make good money from the markets, and it might not be something that they do for 40 years. It might be something that they do for 10, 20, but then they, be able to invest those profits accordingly and be able to then transition elsewhere.
Well, I think if you trade, you do it because you enjoy the game. You love the game. I mean, my best friend lives down the street. She's in her 80s. She gets up at 7 a.m. every morning to play bridge on Bridge Base. And she's playing with people on the other side of the world. She went to Las Vegas to play a bridge tournament. She's like, oh my God, Linda, it was so hard. But she's like a master bridge player, So she doesn't have to do that. She's, her husband passed many years ago, and she's up at 7 a.m. on a Sunday morning playing bridge because she loves it. So if you really love the trading, okay, you're not going to stop and then take those profits and go become an investor. The main reason why you would do that would be if you couldn't withstand the pace and energy and time that it takes, because it takes an inordinate amount of time and resources, period, to the exclusion of not having much of an outside life.
Yeah.
But if you think about a top tennis player, okay, Serena Williams, some of the people, Djokovic. What do you think Djokovic does? He eats, breathes, and sleeps tennis day in, day out, 24/7. He has his health coach. He has his mental coach. He has his private masseuse. Yes, he has a wife, and, she keeps the family running, but he is always working on something, always. And so it's the same thing with trading. You want to be at that level. That's what it takes. Any sports player, a professional pianist, a concert pianist, or opera singer, or musician, that you do it because that is your essence of who you are. And so, in terms of raw numbers, here's a little bit of an eye-opener for you. Now, I'm pretty confident that these statistics still hold true. Revco, when there was a Revco, which was a major clearing firm here in the United States in the futures side, had done a study of all of their accounts. And now Revco was not like a little fly-by-night, brokerage firm. They were a major FCM with, a significant amount of capital. And they did a study of what percentage of their accounts were profitable at the end of the year. Profitable. I mean, just by even $1. And it was under 10%. Okay. Hundreds of thousands of accounts, less than 10% are profitable. And these for most part, were decent traders. And then it's not just being profitable. What percent do you think are actually making their living? Meaning, you can pay your mortgage, you can put your kids through college, you can, sock money away, take nice vacations without the extra services that you're selling, because a lot of people out there, as you know, make a lot of money selling subscriptions and, other things, and more power to them. That's fine. I think it's very difficult to be a full-time trader concentrating and giving all these seminars and webinars and, all these other things.
Yeah.
I mean, it might be doing a service for people and exposing them to different things. But my opinion is, if you are a super good trader, it's a pain in the butt doing some of those other things. It's just as a resource hog, a memory hog. It just, then you're answering all these emails. And I've been there. I did that I did a few, a annual workshop thing, and I spend the next 2 months answering questions, and I'm like, oh my God, why did I? So, but I do think it's about 2%, maybe. And so then later on, about 10, 15 years later, I asked some good friends at TradeStation, actually, and because I was on the institutional desk, and they can't disclose yes or no, but I was kind of like, well, this was a study that was done 10, 12 years ago. Do you think it's sort of along the same lines? It's like, yeah. So if people understand that, let's take all the open accounts right now, forget the Robinhood days, forget the funny money and the diamond hands and the checks and all that kind of stuff. And of course, crypto's an insane world right now. I got a story for you there, too, that will really blow you away, but I'm digressing. But take all these accounts that are out there now and say, who is going to be profitable 5 years from now? And I bet you it'll be about 5%. 5%.
So the number's not really shifting at all.
I don't think so. No, because you're playing with the best and brightest and smartest minds in the world who have better execution than you do, less friction than you do. As a retail trader, you still have the VIG, which is, the bid ask, the commissions, the slippage, all these other variables. So it's not a zero-sum game. It's a negative-sum game that you have to overcome against all the other biggest, baddest, brightest minds out there. And, I love behavioral finance because it tells us so much about ourselves. And we are all overly optimistic about how smart we are, We might just be average, but we still think we're smarter than the next person, And we have cognitive biases, whether you recognize it or not, or you want to admit it or not. And that's also a huge downfall for people. There's 40 different types of cognitive biases that you can research on the internet. And the biggest cognitive bias, do you know what cognitive biases are? The anchoring, the, recency bias, all these types of things. The biggest cognitive biases is, none of those apply to me. I don't have any cognitive biases.
Yeah. That doesn't surprise me at all, to be fair. And I'm sure I've probably felt that way myself on many occasions. And one thing that I find interesting, though, is how those numbers haven't shifted yet. The amount of access to information has increased exponentially. The technology has taken us so far, and the availability to the average retail trader, you would assume that they would shift ever so slightly, but they really haven't. Even from data and reports given from other brokerages and all kinds of brokerages and different elements of the industry, whether it's futures, options, or forex, for example. It all relatively is the same. Why do you think that is?
Okay, now there's a fallacy right there. Information is not going to necessarily help you trade. It's how does the market react to the news? What new information do you think that you are privy to that the big boys don't already know a long time ago that hasn't been leaked out of government offices 2 months earlier by the CEO with earnings? Seriously. How is information of that type of data helpful? It's a distraction. It's going to cause you to make unforced errors. Now, here's a different side. Information such as the amount of volume that comes in on each 5-minute bar. That's constructive information. When I first started trading for the first 10 years, we didn't have that in the futures market. Volume was not transmitted on a timely basis. So you learn to trade without volume. Did it ever make a difference in my trading? No, because volume is highly correlated with the range of the bar. And volume is also highly dependent on time of day functionality. So ultimately, your job as a trader is to strip away these redundancies, so that you're not getting same sources of information from 2 different types of feeds. And if you can just reduce that down and keep on reducing that down, that's ultimately the journey, I think, of most traders, that they start off and you play with indicators and you try different things. And there's nothing wrong with that. It's all good. It's all part of exploration. Let me look at Ikimocho clouds. Let me look at point and figure. Let me look at Renko bars. All these different things, because it draws you into different ways of processing data. There's nothing bad about it at all. And then pretty soon what you see is you might arrive at your own little thing. And then the next 10, 20 years, it's reducing it down and getting rid of things and simplifying things. And then you start to realize it's just a big game of money flows. How much liquidity is out there. And that's the main driver, not a stochastic or this or that. So, and everybody has their own journey. And I'm speaking just from my own experience. So.
Well, what do you think in terms of the increase in educational content and educational information that's out there as well? Like, the access to information on that side of things also, yet we still don't see a change in those statistics in terms of, profitable traders and not.
So what does that tell you?
Yeah.
What does that tell you? I think that the markets are the best teacher. And I think that we do our best learning on a walk-forward basis. So if you're determined to accelerate your learning, reading more books and taking more courses is not the answer. It's okay to take one course. It's okay to, I love the old books that were written, 100 years ago. I mean, you can't beat Schaubacher in terms of basic technical analysis, or I don't know, Edwards and McGee. What more is there to say after that? There's support, there's resistance, there's trend, there's acceleration and momentum or deceleration. That's my class in technical analysis for you.
Thank you.
And time of day functionality. But all joking aside, you can just take those basics. And if you sat down and each day, what do I think is going to happen the next day? Is there a chart formation? Where would I place my buy or sell stop to initiate, if I'm going to initiate that way on a walk forward basis? And that's a notch above paper trading, because paper trading has this little air of not as much thought put into it. But pretend that you are putting out a fax service or a traditional service for somebody with your recommendations for the next day or what to look for. See what happens, and then the next day do it again, and then the next day do it again. So it's all this walk forward learning. If I gave you one simple pattern, and this is really the way that people should start, learn one thing, do nothing but that for 6 months. Don't overwhelm yourself with all this data and sensory stuff that takes a long time to learn how to process. It really takes an incredibly long time to process all this data coming in. Start off with one simple thing. Maybe it's, I'm going to look at the morning trend 30 minutes after the NYSE has opened and to Europe close. I'm just going to give it this little 2-hour window. I'm going to pick the top 3 relative strength leaders. It could be futures if you're doing that arena, or it could be stocks if you're doing that arena. And I'm only going to concentrate on catching a little continuation pattern during that very specific time frame. Now, do that for 6 months. And only then should you start to add. But everything you're learning is on a walk-forward basis. And then you see what it looks like when it doesn't work. And then you can say, well, why didn't this work today? Maybe because we're waiting for FOMC results and there's no volume in the market. So if you don't have volume, you don't get those continuation patterns. And so, in my opinion, that's how the learning process should really go. And the rest, you might pick up something here or there. There's no such thing as a bad course or a bad book. You can find something in everything, right? But this process of reading yourself silly, And that's why I think that those Market Wizards books were such a smashing success. They're not teaching people, how to do technical analysis or trade. They're showing that here's all these different people. They had all unique styles. They all arrived at it on their own and made it work for them. And I think people just love the thrill of seeing it done by others, like knowing that you can run that sub 4-minute mile. So
it's like proof of concept, it allows them to have it. Almost in a sense is like being able to have an example is so powerful, because then it gives you, or at least feeds, some form of self-belief. Because I know a lot of traders, from my interaction with them again, and I've mentioned this a few times to be fair on the podcast, is that because they're very isolated and not really, and they might even be in the community, but they don't know with confidence if this person is legitimately making money from trading. And the reason I say that is because I think that's where as you said, the Market Wizards books really changed things, was because everyone had trust, knowing that we know Jack, his system of verifying all his people highlighted in his books is very thorough. And people then were able to have live examples of people who are really actually made trading a full-time career and at a very high level, and therefore knowing it's possible is a very powerful thing. But one thing that I also like to highlight from that question that we just answered is, I think a lot of people, there isn't such thing as a bad book or a bad course, as you say, but what I think the mindset is, or the problem is that the traders are constantly looking for the very best thing. They're looking for the holy grail. They're looking for the thing that will give them super confidence in the markets. So essentially almost trying to hunt something that doesn't exist. But equally, they assume a lot of the time, I believe, that things have to be complex. It has to be a complex system because the markets are complex. The markets are so hard. So, the natural way of thinking of that is my strategy must replicate that. Well, as I know, you're very, you promote a simple method, simple concept. As you just mentioned there, is focus on one thing and learn. And what I found is that a lot of people may join a course or read a book. And what they do, though, is instead of actually taking the time to learn it first properly, understand it first properly, and then start to apply, they'll try doing both at the same time, where they've literally just watched the video, they're applying it instantly without actually having the nuances, without actually understanding maybe some data. And then they wonder why that doesn't work, and they jump to the next thing. No.
And guess what? That's been going on for 60 years. It's not a recent phenomena. I mean, what do you think the old bucket shops in the 20s and 30s were? And, all these people, the Wyckoff, they all wrote newsletters back in the day, So, but ultimately, you get exposed to new ideas. There's nothing wrong with that. It's part of the process. It's fun. There used to be a period where people here in the United States would go to conferences, the TAG conference, which was Dow Jones Telerate. And then there was the Money Show. And there were these live conferences because there was not the internet and online trading. And you could go and you could hear different speakers and see what sort of suited your style and get exposed to different ideas. And then you would carry that back home with you and, perhaps subscribe to Steve Moore's MRCI's seasonal program and then see how you liked that or this, this style. So there's nothing wrong with that. It all comes down to you have to do your own work. And people are just frickin' lazy. They just don't want to do their own work. And for me, if I am trading full tilt boogie, which I'm not right now because I'm kind of enjoying doing some other things in life, but it would dictate that I need to spend 1 hour minimum every evening logging my numbers, preparing my trade sheet. And I'll go through periods where I'm like, oh gosh, I've got a 3-week stretch here. I can, maybe I'll just have some fun really getting into this. I had a couple surgeries on my arm and elbow where I couldn't do other things. So I'm like, okay, this is a good time to, really get back into it. But I still had to sit down every evening for an hour and prepare it, for the next day. And then my research just never stops. I'm always doing different projects on how can I automate this, OCO trailing volatility stop on, CQG and blah, blah, blah. So I can put the trade on and leave, for the day. And what are the particular conditions that precede that? And can I identify those through a linear program, or do I want to bother with AI, some type of machine learning type thing, which I really don't. And, so it's just, it's like sitting down and doing jigsaw puzzles every night. You have to enjoy that. But generally, as a general rule of thumb, most people don't want to do the work. They'd rather sit and watch the Netflix series or the,
Yeah.
Yeah, right?
Yeah, they definitely do. They definitely do. And I think it really does boil down to that work and being extensive, going the, what some might class the extra mile, which I imagine you would class as, that's just the work itself. That's not going above and beyond, for example.
No, that's what you do. Yeah. I think any entrepreneur will tell you, anybody that has their own business, including you, they're not 40-hour work weeks.
Yeah. I don't think there's, definitely not, especially with this tool. We really, it's strange because, as I said, that above and beyond, for example, is the norm. That is almost the benchmark, and then, above and beyond would be going out of, if anything, there isn't a time or chance to have an element of above and beyond because you're already giving it your all, One thing I did want to ask you, and I think the audience would be annoyed if I didn't ask you, which was the term that you coined, which is the turtle soup.
Turtle soup.
Yeah,
okay.
Which is I don't know if you know this or not, but it's a phenomenon over the last year or two in particular, because someone's tried to not hijack it, but essentially, coming up that they've created this concept. But what are your thoughts in terms of, developing concepts and creating strategies? What is the process of going about doing that?
The turtle soup came about when I was writing this Street Smarts book in 1996 with Larry Connors. And we were just joking around about everything, having a good old time. And turtle soup was tongue-in-cheek because at the time, that turtle strategy of trend following, buying the 20-day highs, had been popularized. And so we're like, well, when that fails, it's turtle soup, chuckle, 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 right? So that's where that name came from. Now, when you test this, because people don't do their own testing, but it's very important to model these things, you'll see that the longevity of that signal is about 1 day. So it doesn't forecast necessarily that you're going to have this huge reversal in the opposite direction. You might get that 1 out of every 4 times. But, that's something in modeling that I always do. I always model the frequency of occurrence. I model the delay. In other words, like, let's say, for example, you're modeling a trend following system. I want to know that there's not going to be a significant deterioration to the results if I enter a day later. Okay, how much is dependent on you entering within what type of window? Okay, so, and then you want to see, like, the decay, how much impact does that signal have, on the close, the next day's open, the next day's close, so forth and so forth. So it kind of is like building these actuarial grids all the time. Yeah. So that's that behind turtle soup. So just because there's this play around there and it reverses, it can come back up, the very next day, as did coffee, Yeah. So the other thing is that this game is very much semantics. And that's what makes it fun. So I'm sure a test and a failure test, you have Wyckoff with his springs and upthrust. You have Expandeo as to be or to not to be, there's like a zillion different little things. And there's none of it's like copyrighted or trademarked or anything like that. It's just make it a joke. I don't care if somebody wants to call it their own. What do I care,
Exactly, yeah, no.
I don't have any ego in that area, Oh, knock yourself off. You want to have the grail too? Fine, take it. It's yours.
Do you know, in terms of your trading, how much of it was mechanical versus discretionary?
Oh, it's 100% discretionary. Yeah, 100%. I have done some mechanical trading when I had my fund. I had a couple little separate profit centers that were volatility breakout systems, because that's one of the very few mechanical systems that has an edge, although it has a ridiculous amount of variance, you see. So you have to know the nature of the beast that you're dealing with. So I just thought it would be an additional overlay. I learned a lot by trading the volatility breakout system. I actually had somebody else doing the execution on that for me. But net, it only added about 1% to the bottom line. And I'm like, that's just not enough to justify all the overlay of costs and time and work and energy. So I would say 100% of my trading is discretionary, but it's all around models. So, and I test my models. Most of them are like, if I entered on the close or if I entered on the next day's open, so then what would the computer do? And then I can have a benchmark to judge myself against a computer. Most of them also just have maybe two variables and one filter. So they're durable and robust. The stuff has held up for 40 years. It's all the same stuff I've been doing, for all these years. And the sophistication part might come in, do I want to trail a stop? I'm doing that a lot more because I can just walk out of the office then and, set it and forget it. I don't do it that much. I put a lot of time and energy and development into this, but it's still, I like being in control.
I like that. And one thing that I've sort of tried to pick up on from our conversation is how focused you are in terms of collecting data, reviewing your trades, and almost making decisions off the back or creating models off the back of data. How important as a trader is that?
I did it in the very beginning. I really haven't done it for 30 years. I mean, I have updated my models. I'll occasionally run them to see if the stats are still the same. And when I do my modeling or my testing, I do it in 3-year blocks. So I'll do, 2000 to 2003, 2004 to 2006, 2007, just so I can see if there was a unique event that led to outperformance in a particular market. For example, natural gas at one point before we had fracking, had some insane moves on some of these mechanical systems because it was hurricane season in the Gulf, and then that went away. But I don't want to include that in my results going forward. And, another thing that people forget is we have bull markets, bear markets, dead markets in just about every market that's traded out there. So I think it's really important to test in blocks. And then the last thing is that people far underestimate the importance of sample size. And I see people drawing conclusions off of a sample size of like 26. I'm like, huh? Like normal statistics would tell you that in order to get a decent confidence factor, meaning some validity to your idea, you need a sample size of around 36 or something if you're just looking at traditional standard deviation models and so forth. And no, my experience says you need a sample size of 300 before you can go about trusting anything, which isn't easy because you might not have that frequency of occurrence. But then that's where you have to say, well, I'm going to look across multiple markets. That will build up my sample size. Now, is it a true principle of price behavior? Aha. Yes, a market is a market. Doesn't matter if it's a market in cows or a market in corn or a market in bonds. They have their subtle nuances, of course, because of liquidity provisions and commercials and seasonality and stuff. But, markets all behave very similarly in that they are driven by people and supply and demand. They tend to overshoot to one side and overshoot to the other side. That's Soros' theory of reflexivity, which he did not invent, but became popularized from him. And then all markets go through periods of positive feedback loops, and then tremendous periods of noise. So those are the common denominators with just about all markets. And if you understand that and can then understand the importance of putting things in context, which is really where the experience level comes in, understanding the context. A continuation pattern is not going to work in a range-bound market with too high of a noise factor. But a continuation pattern, if you're so lucky to get one in a market that has these positive feedback loops, it's like gold, and you're probably not going to get one because that's why it's a positive feedback loop and it leads to that parabolic acceleration. How do you trade that? Most people don't know because the frequency of occurrence is much less. So we don't know how to deal with these events that come along that we just haven't seen much of. So see, now you understand how you can study this stuff till you're 97 years old with one foot in the grave. And we could talk all day long here.
Definitely. I want to finish up with just one or two last topics with you. But one in particular was, of course, the range of size that you would trade. The element of risk and profits and the general size of the trades that you took across your career would have dramatically increased over time. And, did you ever find any challenges or any key lessons from that evolution?
Well, I hate to say it, but my trade size was much bigger the younger that I was. Oh yes. So this is very common too, that the younger you are, the more variance you have in your bottom line. Most people would be more like loose, aggressive type of traders. And then as we age, we become tight, aggressive type of style of trading. And but I, especially when I started to manage money, firmly believe in an even bet size. So what I did is I reduced everything down to the average dollar range of that particular market. And I redo this on a quarterly basis. So, for example, if the average dollar range of a corn contract is $600, but the average dollar range of a crude oil contract, is $3,600. Well, I can trade 6 times more corn per unit size than crude. So I reduce everything down to a unit size. Now I might say, okay, for each $100,000 I have in my account or my program, that will buy me 1 unit. Okay. So now for every $100,000, maybe I'll trade 6 corn, but I'll only trade 1 crude oil. All right. And so now you just keep on multiplying that for every $1 million, for every $10 million, which makes it very easy when you're managing money and funds are going and coming and going. And then you have to be mindful of correlation. And it's not just correlation between gold and silver or the indices or something like that, but you also have to be extremely mindful that correlations break down when there is an outlier event. And that's where people really get into trouble, thinking that they have a diversified trading portfolio, but no, it's just Katie bar the door, liquidate everything, throw the baby out with the bathwater, And so that's where you need that cutoff for your account and say, if my account balance drops down by more than 10%, everything is getting closed out. Because you don't know if there was a nuclear blast or a tsunami or what's happening. So all of this is in a greatly neglected area called risk management. And the last thing that I'll say with risk management is that, because everybody likes to talk about entries and exits and all the little fun things, and I don't know how much time you have. I've got one story for you if you still have time.
No, of course, no, don't worry.
Okay, but this risk management thing is not just about the leverage that you use, the stop, the initial stop, but also your use of capital, time spent in the markets. So, for example, a person that's in the markets, for the less time you are in the markets, the less exposure you have. Put it that way, the less risk you have. So if I'm in the market for 10 minutes and then I'm out, my risk is extremely minimal because I'm not susceptible to any event risk or things along those lines, you see? And so you can go off into so many tangents with this, but it is a really important part of the trading, you know, the time, the risk, and our own mental capital, right? Okay, we can talk about our, you know, actual capital that we have to trade, but we do have to have a balanced life, you know, exercise and eat right and so forth. And
I could speak to you all day, really, I could, and I would really enjoy to hopefully do something again in the future. And I appreciate you being here as well with us today. Like I said, it's a true honor. And everyone at home, drop a comment with your biggest takeaway from this episode. I know there was so much. Links for Linda will be in the description below, so make sure you check those out too. Other episodes are on screen. And until next time, everyone, take care.